Good morning. Today's topic is going to be tax laws, tax planning. Once again, my name is Cesar Garcia, founder of Tax Advisory on Financial, and we are going to discuss the tax laws involving tax planning. What is what we need to do to have a better tax effect by the end of the following year, and to not pay more than what we're supposed to pay to both our federal government and the state government. And let's start with income. Income gets taxed differently. Passive income, capital gains, ordinary income, interest income, okay, W-2 income, self-employment income, all those different types of incomes, okay, they're subject to different tax rates. The ordinary tax rate, the capital tax rate, the self-employment tax rate, to name a few. Okay, so not paying more than what you're supposed to pay to the government requires planning. Planning involves sitting down, forecasting your income, okay, to determine how much exactly you will be paying in taxes for the 12 months, for the whole year. Okay. Perhaps planning involves investing in real estate. As you find out as we progress with these videos, one of my best strategies and advice I'll give to anyone will be invest in real estate. You have the advantage of the depreciation expense that we're gonna cover later in another video. Okay, on top of the regular expense that you incur during the year, okay, to operate and maintaining the property. If your income is strictly W-2 income, you're subject to at least 3 taxes depending on what state you're located in. Federal income tax, Social Security tax, and Medicare tax. If you're currently watching this video and if you live in a state like, for instance, California, which is the state we're in, you pay state tax and California SDI, which stands for California State Disability Insurance. So before you actually get your check, you already paid 5 taxes, and that's not including health coverage, 401k, or any other payments you contribute to get some kind of benefits. Purchasing real estate and maximizing those expenses will, in fact, offset your W-2 income. Okay? If you just have W-2 income, as the income goes up, the tax rates go up. The ordinary tax rate goes up 10%, 12%, 22%, up to 39%. When you have another activity going on, for instance, real estate, a business on the side, escorts, okay, some kind of partnership. But let's just focus you. You're gonna try to know right now, for you, just doing business yourself, do purchase a real estate, rental property. Okay, you'll be with those expenses, okay, allocated to the property, to the rental property, okay, they will offset your federal adjusted gross income. So the income, so if you have, let's just say, $100,000 in W-2 income, but you had a $30,000 loss from your rental, now you have an adjusted gross income of 70,000, and then on top of that, you have your personal expenses, either itemized deductions or your standard deduction, depending on your family status. Okay, so now if you're single with no personal property, no mortgage, for instance, for 2026 you'll be entitled to get a tax deduction of 16,000 roughly. So now with your adjusted gross income after netting your rental with your with your W2 income, you have 70 minus the 16,000. Now you're looking at 54,000 taxable income. And the minimum tax is 10%, but you'll be paying 10 and 12% based on the filing status, and perhaps a little bit of 22%. So your tax bill will be roughly about 7,000. Hopefully you already paid enough from your wages, the federal income tax. Hopefully, because that will bring the tax lower. Whereas if you don't have your rental property, okay, your tax bill will be, with just 100,000, your tax bill will be about 12,000, 13,000, because as your income goes up, it's no longer gonna be 70,000, it's 100,000. You're gonna be subject to $13,000 taxes to the state, to the federal. That's not including any state taxes that you might be subject to. Okay, so this is just a brief description of how to offset and how to plan for your taxes. Okay, later on in another video, we're going to show different scenarios, okay, to be able to maximize and offset your tax liabilities. Thank you very much. Once again, my name is Cesar, founder of Tax Advisor and Financial in the city of Wilmington, California. If you have any questions, please comment below. Okay, thank you very much. See you guys later. Bye bye.